everyone, Kasim here. If you're new, welcome. If you're not new, welcome back. In this video, we are going to talk about my trade setup. Now, I did a video a day or two ago, which I share with you my trading setup. I have it in the link below. You can go check it out. It's a step-by-step video of my setup and how you can have my setup. And the link will be right above here. It will pop up like right now, so you can check it out yourself. And basically, I turned that video. It's a 30 minutes long video. I'm turning it into a 3-clip video, so it should be like 6 to 10 minutes because I know people don't like watching long videos. So I want to turn it to a 6 to 10 minute video, so it's a more bite-sized chunk. So I hope you enjoyed the video. Let's get into it. Hello everybody, so welcome to my computer. So what we're gonna do is I'm gonna share with you my exact trading setup. This is my exact trading setup. Like I said in the intro, this video is for people that already know how to trade. If you already know how to trade, this video is for you. I will have more video coming up. I'm gonna break it into like short videos, explaining everything, explaining the type of chart I use, what these lines are, what those are. For those that know how to trade, you're gonna understand what I'm saying if by me naming it. But I'm gonna explain everything in details for the beginners. Every single step, I'm gonna do a video on that. So stick around, subscribe. You're gonna learn a lot from this channel. Now, what I'm looking at here, for those of you that already know how to trade and you already know what moving averages are and all those things, this is for you. Okay, so the type of charts that I use right here is called the Heikin-Achi. This chart right here is called the Heikin-Achi chart. It's a Japanese style chart. It's way better than the regular candlesticks. This is why I use this. This is called the Heikin-Achi chart. So that's that. These lines that you see right next to it, these are the EMAs, right? I use a couple of different EMAs because key levels, when you're trading, you wanna look at, transitions, what's going on. So as you can see, EMAs, this EMA cross from the bottom right here, crossed over right above. You see the yellow line cross right above, and then it followed the stock up. So I use EMA with Heikin-Achi, right? Those are one of the tools that I use. The other main ones that I use, which these are the moving averages. And as we all know, Wall Street use moving averages. Mainly they use VWAP and moving averages for the most part, right? The famous moving average that people use on Wall Street are the 200 moving average, which is the blue one right here. This is the 200-day moving average. This light blue one right here is the 100-day moving average. You know what? I'll pop it on and open it and show you. This one is the 200-day moving average, as you see here. This 200-day moving exponential moving average right on top here. This one is the 100-day moving average right on top there. Right at the bottom, this gray one, this is VWAP. This is called VWAP. And those of you that know how to trade, like I said, this is VWAP. Those of you that know how to trade, you already know what VWAP is. When price is above VWAP, it's bullish sign. When it's below, it's bearish. With the VWAP, I took out the upper bands. I unchecked the upper bands, and also I unchecked the upper and the lower bands. So I'm just only using the middle VWAP. That's the VWAP. So right here, this is the 200, the blue one. The one right next to it, that is the 100-day moving average. This yellow one is the 50-day moving average. As you can see right here, this is the 50-day moving average. And we have the 20-day moving average right there. So these are moving averages. These are EMAs. I'm going to be doing more details on all this for the new people, the new beginners, people that started trading, that all are looking into trading. I'm going to do more details on it. But for now, those are that's the V moving averages. This gray one is VWAP, and then right at the bottom, all this arrow right here, this is the crossover like divergence, right? It's basically used in MACD. So this is actually called the MACD histogram crossover. It basically measures divergence in a stock. So I use that. I'm going to be explaining this in more the upcoming videos. So I use that. I use the positive to negative and negative to positive, so we can see what's going on both sides. So here, what I have here with the volume is obviously color coded, and I have the average volume indicator also highlighted there. And at the bottom here, I have the TT squeeze. If you don't use the TT squeeze, please stick around, subscribe. I'll be doing lots more videos on the TT squeeze. This is actually a really great great tool to use. So I've combined the TT squeeze with the momentum indicator, right? So that's what this is. As you can see, at the bottom here, if let's say we bring this in a little bit, so as you can see at the bottom here, the momentum indicator start edging upwards, and the TT squeeze also signify a bullish sign. In addition, with the high volume plus the crossover divergence indicator, this is a perfect trade right here. Perfect trade. This is how I like to trade. I don't like to hesitate. I like to just look at a chart and know what's going on, and using different tools together really helps make that happen. So that's that. Let's get into the second segment, and I'll show you what I'm actually trying to do here. Give me a second. If you enjoyed that clip, hope you've learned a lot from it. If you want to watch the full version of that video, you can click on the I button right above this video that you're watching, and you can watch a full-length video. It's right there. And thank you for watching the video again. Subscribe, like this video if you like what I'm doing here. Stick around. I'll be bringing a lot more content for you, so we can all improve our financial situation. Maybe, quit a job one day and be able to trade and invest and do other things. So stick around, like and subscribe, and I'll see you next time. Thanks.